Bitcoin is down pretty hard right now, while STRC is remaining pretty strong. I think we can learn some things about who's buying Bitcoin and what kind of demand is showing up in this Bitcoin drawdown. So this research from River shows a summary of this downturn. Individuals sold for the most part, while businesses, funds, and governments accumulated. That's a handoff of Bitcoin, and retail tends to sell volatility while institutions tend to buy it when they can size it. Smart money is flowing into Bitcoin because they realize nothing fundamental has changed. The only thing that's changed about Bitcoin is the price. So let's talk about STRC and explain it a little bit. So STRC is Strategy's preferred equity. It's a type of digital credit and income generating Bitcoin wrapper that attracts a completely different buyer than spot Bitcoin. In a yield-starved system, products like this get real demand. Despite the drawdown in Bitcoin, STRC, which is essentially Bitcoin-backed credit, has been maintaining a very stable price. It dropped briefly from $100 to $93 during the peak of the latest Bitcoin drawdown, but the important thing to note here is that $93 represents a higher yield. So this instrument has a $100 par value, basically meaning no matter what the price of STRC is, you're still getting that dividend as if it were an $100 instrument. So that's why you can see here the dividend is 11.25% with an effective yield of 11.29% because that price is just slightly below $100, so you're getting a higher effective yield. STRC dividends are paid monthly. Again, that 11% is an annual dividend, but it's paid every month. Income generating buyers aren't trying to time the market. They want steady cash flow. Retirees and yield focused portfolios can justify holding something like this even if Bitcoin is volatile. The bridge here is that STRC is not Bitcoin, right? It's basically a diluted form of Bitcoin. Bitcoin is permissionless money, but STRC demand can create a persistent bid for Bitcoin through Strategy's balance sheet. The demand for STRC has been very high, and I believe it will continue to do so, especially as people start to understand what this is and that it's not volatile Bitcoin exposure, it's digital credit. So we can see a very persistent bid on STRC, which leads directly to more Bitcoin purchase and taken off the market. So we've had 34 million shares of STRC sold through Strategy's SEC 8K filings with an IPO of 28 million shares. I believe it was one of the highest grossing IPOs this year. That IPO generated $2.5 billion, and now with a total of $3.2 billion just from sales of STRC, which accounts for about 28,556 Bitcoin purchased by Strategy just by issuing STRC shares. This persistent bid on Bitcoin through Strategy's capital structure is a way for institutional capital to express this trade in a form that they can hold and volatility that they can stomach. This is not a one-to-one. Owning STRC is not a replacement for buying Bitcoin, but it's important to understand why the bid under Bitcoin can stay stronger than retail sentiment might suggest. Bitcoin is revolutionary because it's money you don't need permission to use. STRC is a legacy finance friendly wrapper for buyers looking for consistent cash flows. They're different tools with different buyers and different target audience, but they point to the same macro direction and the asset is being absorbed. It's a great product for people looking for that fixed, consistent dividend, especially maybe for a retirement portfolio or something like that. Strategy also has a few other preferred stocks, so if you have any questions on any of those you'd like to break down, just leave a comment with any feedback or suggestions for future videos. Like and subscribe if you're enjoying the content. And as always, together let's work, save, and build a better future with Bitcoin. See you in the next video.